morning, we will pay attention to income tax and dividends declared on shares today. On the 1st of March 2022, 11,240 was owed to SARS. You must be very careful here. Determine whether the money is owed to SARS or whether the money is owed by SARS. If the money is owed to SARS, it means the business owes the money, then it's a liability and it will have a credit balance. If the money is owed by SARS to the business, then it's money that the business must receive in future, then it will be an asset and it will have a debit balance. Okay, so the opening balance is 11,240. On the 31st of August, provisional tax was paid to SARS. Now, where you normally make a mistake here is you want to go and put it into the income tax account. You are not allowed to write anything in the income tax account until the end of the year, when they calculate the final profit for the year and they determine what is the actual tax that the business must pay. So these provisional tax payments will go in the SARS income tax account to indicate that you are paying off your debt at SARS on the profit that you're making this year. So on the 31st of August, we paid 25,600, and and then we paid 11,240, and on the 27th of February we paid 42,400. Okay, the company must pay 25% tax to SARS. The actual profit is 250,000. So now I know the actual profit, and for the first time I can determine what is the income tax that we have to pay for the year, and that is 70,000. So I'm allowed to write in my income tax account now, because income tax is expense, so I create an expense on February the 28th, and we indicate that this will be transferred and the double entry will be done in SARS income tax. And in the SARS income tax account, we will indicate income tax, because that is the account that was debited. Okay, then I can add up my SARS account, and I see it's 81,240, and the balance is 2,000. So it means the business didn't pay enough provisional tax during the year. They still owe 2,000 to SARS. What we will do at the end of the year, we will close off our income tax account and transfer it to the appropriation account. So on February the 28th, we will indicate that the expense is closed off and the 70,000 is transferred to the appropriation account. So that indicates that the total profit in the appropriation account is 250,000, and of that 250,000, 70,000 will be paid to SARS for income tax, and then they can only decide on the dividends. If we have to do this in the income statement, you must remember that the income statement of a company and the income statement of a sole trader is exactly the same up to this point, profit before tax. So in a sole trader or partnership, you will have here net profit for the year. In a company, that word is changed to profit before tax, then you will deduct the tax, and then you will have net profit after tax. So our profit for the year is 250,000. Then our income tax we calculated as 70,000. So if I deducted my net profit after tax is 180,000. For this 2,000 that we still owe to SARS, it means that we still have to pay it in the future, so it's a liability to me, and I will have to pay it early in the next financial year, so it is a current liability, and I will indicate that we've got a liability of 2,000. Okay, if we look at example 2, on the 1st of March, 11,240 was owed by SARS to the company. So it means now the company must still receive this money from SARS. So it's an asset to the business. So it will have a debit balance of 11,240. Then we pay provisional tax, 25,600. And again, we paid provisional tax of 42,400. Okay, the profit for the year is 250,000. We have to pay 28% tax on it. So I will take the 250,000 times the 28% to determine what is my profit. And the total profit then, the tax on this would be 70,000. Okay, so for the first time, I know exactly what is my tax for the year, so I can debit my income tax account and I can credit my SARS income tax account to indicate that is the amount that we have to pay to SARS. Then I will calculate the debit side and the credit side to determine whether we've got a debit balance or a credit balance. In this exercise, the debits is more than the credits, so I will add up the debit side first. Then I will subtract the 70,000 from it to see what is the balance. That means the business paid too much provisional tax to the government, and the government actually owes the business 9,240. In my current liabilities, I will show that this must now be a current asset because the money is owed by SARS. So we will not write this under current liabilities, we will write this under current assets. And we will indicate that the amount that we will receive from SARS in the future is 9,240. Your profit before tax in the income statement would be 250,000. The income tax is 70,000. So the profit after tax in the income statement will be 180. So this is the only part in the income statement that companies are different from the partnerships and sole traders. In example 3, they give you a trial balance and they tell you that the provisional tax payments is 68,000. So it means when they paid it to SARS, the bank was credited and provisional tax payments was debited. This amount was supposed to be in your SARS account to indicate that you decrease your liability. So I will credit my provisional tax payments basically to close that expense, and we will debit SARS, and we will show that we have to transfer this amount to the SARS income tax account because they've put it in the wrong account. Okay, and the provisional tax payments that we made was 68,000. The income tax that must be paid is 70,000. So I will show on the credit side that we will credit SARS with the amount that must be paid, 70,000. and the income tax account, that's the expense, will be debited with the 70,000, and we will indicate that we will credit SARS income tax. Remember, we did tax in grade 10 when we did pay as you earn, that you pay on your salaries. Then in grade 11, we paid VAT. So you actually have three different SARS accounts. The one is for the salaries that you pay as you earn. The other one is for the VAT, and the third one is for the income tax of a company. So it means you can't mix all those accounts together, and that's why you will show SARS, that is what the creditor, and in brackets we show which type of tax it is that we have to pay. If I look at this now, it means that there is a balance of 2,000, and this balance is brought down on the credit side. So this will appear in your balance sheet under current liabilities. In example 4, we will do the dividends. The company issued 500,000 shares on 1 March 2020. So that means it's before our current year. If we look at our financial year, it is from the 1st of March 2022 up to the 28th of February 2023. Okay, so in my authorized share capital, I will not indicate any amount because we don't know when we're going to issue these shares and at what price we're going to issue it. So the only place where you ever use your authorized share capital is in the note that we're doing at the moment. You will never use this million shares for any calculation to calculate dividends or to calculate what is the value of my capital. We will always do all the calculation on the issued share capital. Okay, so they say at the beginning of the year we had 500,000 ordinary shares that we sold at R2.20, so that gave me 1.1 million. Then 200,000 ordinary shares were issued during the year at R3. So that gives me 600,000. And we repurchased shares. Now, when we repurchase shares, it means that we have to calculate the weighted average method and determine how much we can take out of capital. So if I look at my ordinary share capital account, on the credit side, I've got 1.1 million and I've got the 600,000. So it means at this stage, when we repurchase, the total amount, the value of my share capital is 1.7 million. So I will take that 1.7 million and I will divide it by the number of shares. And there was 500,000 at the beginning of the year. We issued an additional 200,000, so the number of shares was 70,000 at that stage. And that will give me an average price of R2.43. So in this ordinary share capital account, you can't take out more than what you've put in on the credit side. So if I work out the weighted average method of all the capital that we've got, it's R2.43. So we can only take out R2.43 on the debit side. They say that we're going to repurchase 100,000. So in my ordinary share capital account, I will show 100,000 times the R2.43, and that will give me 243,000. So my ordinary share capital account, I will debit and indicate that I decrease my ordinary share capital with a 243. The rest of the amount, we are paying them R2.80, means that there's 37 cents difference, and that will be taken out of my retained income. So I will multiply the 100,000 with the 37 cents, and that will give me 37,000 Rand. And this means that the total amount here gives me R2.80. That's what I'm paying back. And if I add this up, it gives me the 280,000, the total amount that we will decrease our equity with. So as soon as we pay more for the shares when we repurchase it than what the average price is, the average price will be taken out of the ordinary share capital, and the bit that's more than the average price will be taken out of retained income. So in my share capital account, I will show that we've repurchased 100,000 shares times R2.43, so my capital decreased with 243,000. In my retained income account, I will indicate that 100,000 shares were repurchased at a price higher than average, and that was 37 cents. So I will take 37,000 Rand out of my retained income. If we look at the dividends, they say on the 31st of August, a dividend of 28 cents per share were declared. Now here, when you do dividends, you must look at your dates very carefully. This dividend was declared on the 31st of August. Anybody that's got shares, whether they have it for 1 day or a year, when the dividend is declared on ordinary shares, they will receive the dividend. The new shares is issued after the 31st of August, so the new shares will not receive the interim dividend. We will take the 500,000 shares that we had before we issued the new ones, and I will multiply that with 28 cents, and that means that we will take 140,000 Rand out of my retained income to pay the interim dividend. Then we issued another 200,000 shares at 3 Rand. So now we've got the 500 plus the 200, we've got 700 left over. Before we declare the next dividend, we repurchase the shares. So we repurchase the shares, and then we declare the dividend the next month. How many shares do we have on 28 February? 500,000 plus 200 minus the 100,000 that we repurchase. So it means that we actually have 600,000 shares. So this recommended dividend at the end of the year will be calculated on the number of shares that we have on the 28th of February, and we will pay them 40 cents. Now, because it's declared on the last day of the month, we will normally not pay it immediately. We will pay it at the beginning of the next financial year, and that means it is money that will go out of the business, but it was not paid yet. Okay, so it will go out of my profits, and I will show that my profits will decrease with 380,000 Rand. And the retained income at the end of the year, 92,400 plus the 604,800 minus the 37 minus the 380 will give me the retained dividend income at the end of the year as 280,200. Okay, so what you put in this note is exactly what you've got in your ledger account. So if you're unsure how to do the notes, complete the ledger account, and then you will know exactly how to put the amounts into your note. If we look at example 5, here they don't give me the number of shares. They tell me how much money that we owe for the shareholders at the end of 2022 and then at the end of 2023. Now in 2022, the outstanding amount was 210. So it means we started with a balance of 210,000. On the 1st of March, we paid this amount that we owed to them. So it means the shareholders for dividends was debited and the bank was credited. Then on the 30th of August, 20 cents per ordinary share was declared and 140,000 Rand was paid. So again, I don't know the number of shares, but they tell me that the dividend that I declared on that day in total was 140,000. And then they say on the 28th of February we declared a dividend, but they don't give me the number of shares. So it means I must go and look in my trial balance. What is the amount that we owe at the end of the year? And then I will show the balance here is 480,000. The amount that we owe at the beginning of the year, we had to pay in March. The interim dividend must always be paid immediately. So if they tell me there's a balance of 480, it indicates to me that is my ordinary share dividends, because these two will be the same. And then I will show the balance that will be carried over to the next year will be 480,000. How many shares did the business have on 30 August? Okay. If you look at the 30th of August, we paid out 140,000. Of that, 20 cents. So it means if I divide the 140,000 with the 20 cents, I will see how many shares we've got. And that indicates at that stage that we had 700,000 shares. If you want to check yourself, you can say 700,000 times the 20 cents, and that will give me the 140,000 that they told me. How many shares did you have at the end of the year? We paid out 480,000 Rand. The dividend was 60 cents. So if I divide it by 60 cents, it gives me 800,000 shares. And I can check myself, 800,000 times 60 cents will give me 480,000 Rand.